Welcome to Catalyst. I'm Seana Smith alongside Brad Smith. 30 minutes into the U.S. trading day. Let's get to the three catalysts that we're watching this hour.
Yeah, first up, traders pare back bets on Fed rate cuts amid dovish commentary from the Fed. We break down the comments and get the latest read on the consumer.
Plus, we'll hone in on China's consumer as e-commerce giant Alibaba beats profit expectations. We got those details ahead.
And we push ahead to Nvidia's earnings out next week as investors turn their focus to the AI chip giant.
President-elect Donald Trump's victory and hotter than expected inflation may be complicating the Fed's path forward on rates. Here with the latest commentary that we're getting from Fed members, including Fed Chair Jay Powell, is our very own Jennifer Schomburger. Hey, Jen.
Good morning, Seana. Fed Chair Jay Powell and other members of the central bank this week said they still continue to expect cutting rates, though Powell said that the central bank is not in a rush. Earlier this week, Minneapolis Fed President Neil Kashkari told me in an interview that it would probably take an upside surprise to inflation not to cut rates in December.
If we saw inflation surprises to the upside between now and then, that might give us pause. If the labor market, it'd be hard to imagine the labor market really heats up between now and December. There's just not that much time. I think there'd have to be a surprise on the inflation front to change the outlook so dramatically.
October inflation readings out this week showed little progress toward the Fed's 2% target, calling into question inflation and how deeply the Fed will cut interest rates next year. But Powell reassured investors, saying Thursday he continues to expect inflation to come down to 2%, but added, quote, albeit on a sometimes bumpy path. He noted he expects fluctuations in core measures of goods and services inflation, excluding housing, within their recent ranges, but will be carefully watching to ensure they do so. Powell noted the Fed is moving over time to a more neutral policy setting, but said, quote, the economy is not sending any signals that we need to be in a hurry to lower rates. Take a look at Fed funds futures this morning, which have been very volatile this week. Right now, pricing in just about a 58% chance of a rate cut in December, down from odds of better than 70% before Powell spoke on Thursday. Meanwhile, Powell was asked under what circumstances he would consider continuing to serve on the Fed board after his term as chair ends. Take a listen.
I'll certainly serve to the end of my chair term, and that's really all I've decided and all I'm thinking about.
This afternoon, I'll be speaking with Richmond Fed President Tom Barkin. Guys.
All right, Jennifer, thanks so much. Appreciate it. Let's turn to the market reaction to Powell's comments and retail sales here as Treasury yields are ticking higher as traders rethink bets on Fed rate cuts. Joining us now for more, we've got Chris Rupkey, who is the chief economist at Forward Bonds. Great to have you here with us this morning. So as you kind of look at the overall inputs into the economy right now and really start to think about how the Fed may also be positioning itself, what are some of your anticipations and the corollary to where the bond market may move as a result?
Well, it's interesting. I mean, they've given us a game plan. We've never had a schedule for rate cuts. Usually the rate cuts that we've had are, emergency type cuts in a recession or a pandemic. But this is the first time they've put out a forecast showing rates going down to 3.5% next year. But that's kind of being called into question right now. I'm a little worried when Fed Chair Powell says there's no hurry. It makes me think they're a little bit taken aback by the speed of the Trump administration hiring people and talking about what they're going to do in terms of fiscal stimulus, spending cuts, et cetera, tariffs. Maybe they're a little bit worried, Powell, even though it's too early to judge what is ultimately going to come out of the new administration.
Chris, what are your expectations for growth next year?
Well, that was interesting. Powell came up to my number. Well, he said yesterday that the economy right now is running 2.5%. So given the strength of retail sales today, there's no hesitation on the part of consumers right now. All this uncertainty, there's been hurricanes damaging. There's been strikes. The election uncertainty, as I said, nothing has slowed them down. In fact, right now, retail sales is running even faster after today's data. It's running 3.7%. A month ago, we thought it was only running 1.2%. That's in the fourth quarter. So what that means is the economy is probably going to run 2.5% this year, with GDP 3% in the fourth quarter. So that's important. Remember, they always say, watch the Fed forecasts. You know, if the forecasts need to change and they get it wrong, then maybe policy is going to have to change or be different as well. And right now, the Federal Reserve is looking for only 2% growth, 2.0% growth in this year. And growth is running 2.5%, much stronger. So maybe that's part of the reason why he's saying they don't need to hurry.
I mean, Chris, what is part of that consumer resiliency? Is it people like me who say, all right, I can't buy a house right now, so I might as well just buy some new shoes. That'll make me feel good. And if ultimately the goal is for the Fed to pull off this soft landing, can that soft landing be orchestrated without or with the housing market staying the way that it is right now?
That reminds me of the before the Great Recession with Bernanke at the helm of the Fed. He continually said the weakness in the economy was confined just to the housing sector. And then, of course, everything blew up and we had the biggest recession since the Great Depression. Right now, similar. Housing is down in the dumps, especially existing home sales. New home sales have picked back up a little bit. But, you know, because 10-year yields have moved back up, mortgage yields are not going to come back down to provide relief or a boost to housing sales. So, yeah, it's kind of an interesting time. The economy looks pretty strong. The only weakness is housing. And so far, that weakness hasn't even translated into people buying less furniture or appliances and things like that. I was really surprised that there is a bit of a services spending component in retail sales, which are mostly goods-based. But, you know, bar and restaurant sales were fairly strong, both in September and in October. So the public isn't staying at home. They're venturing out. There seems to be no fears about the outlook.
All right, Chris Rupkey, Forward Bonds, a chief economist. Thanks so much for joining us here this morning. Let's take a look at some of today's market headlines to start the hour, sponsored by Tasty Trade. First up, the major averages. We've seen a bit of a reversal here in the last couple of trading days. Today, we're trading once again to the downside. You got the Dow off just around 272. The S&P and NASDAQ also under pressure. You got the NASDAQ, the worst performer of the three. Flipping over to the bond market, a bit of an uptick here in yields following that retail sales print that we got out before the bell this morning. The 10-year now right around 449, just shy of that 4.5 level. And taking a look at the oil market here, heading for a weekly decline. You've got Brent off just about 0.5%, as well as crude trading just above $68 a barrel. Keep right here on, finally, sorry, let's take a look at Bitcoin. We almost forgot about it. We have to take a look at Bitcoin here following the massive run that we've seen, but giving back some of those gains once again today, trading just under 89,000. Coming up, we're taking a look at today's trending tickers. We'll give you the news behind those moves. That's next on Catalysts. Now time for some of today's trending tickers. You can scan the QR code below to track the best and the worst performing stocks of this session. That's with Yahoo Finance's trending tickers page. First up, Nvidia is set to report third quarter earnings next week, rounding out the Mag 7 this earnings season. There's a lot riding on this report, given the recent momentum that we've seen in the stock. Dan Halley joining us now for more on what to expect. Dan.
Yeah, Seana, this is obviously the biggest announcement for this earnings quarter. I mean, it can't be overstated how important NVIDIA is to tech and the broader landscape as far as AI goes. So let's just kind of give you a rundown of what's happened in this quarter. They've eclipsed Apple as the largest company by market cap. They're now ahead of Apple still, so we'll see how long that holds out. They've also had a number of kind of ups and downs as far as we've heard with regards to potential tariffs. It's obviously been an ongoing conversation. Some experts I've spoken to say that if Trump levies tariffs against China and Taiwan, which is something that he had mentioned prior to the election, that it could be a big problem for NVIDIA or NVIDIA's customers. But let's go over some of the numbers real quick as far as what we're expecting. For the quarter, we're looking at potential revenue of $33.2 billion. That would be up from $22.1 billion in Q3 last year, or an 83% year-over-year increase. EPS is expected to be 74 cents, up from 40 cents in the same quarter last year. And that's an 83% year-over-year increase. And the biggest part of all of that, obviously, is NVIDIA's data center business. And that's expected to be coming in at $29 billion versus $14.5 billion in the same quarter last year. That's 100% year-over-year increase. And then NVIDIA's kind of second banana now, gaming, is expected to come in at $3 billion. That's up from $2.8 billion, so just a 7% year-over-year increase. And gross margin, they're expecting it to be 75%, and that's a 0.04 year-over-year increase. So investors are obviously expecting or hoping for a beat and raise scenario. That's been kind of NVIDIA's MO. I think one of the things to keep in mind, though, is after the prior earnings report, we saw NVIDIA's stock price drop. Now, there's a few things you could have attributed that to, whether that's people just profit taking or disappointment on the beat and raise, the raise either not being as much as investors wanted or the beat overall not being as much as what investors had wanted. And when you're going from beating by 200+% in revenue for the quarter to 100+%. I mean, you know, beggars can't be choosers, but I guess in this case, they can be. And so I think one of the big issues that investors are going to be wanting to hear about on the earnings call from Jensen is the status of Blackwell. That's the most advanced chip that NVIDIA has that they're rolling out. There were previously reports of delays, and then NVIDIA said that everything's sorted out and all good. And so we want to find out more about what's going on there. You can expect investors to ask about when orders are going out, if orders are going out, and if they're reaching the customers, and then what the volume looks like of those shipments, if they're going out and when they're going out, if it's more than expected, and what that looks like for the prior generation of chips, the Hopper line of chips, which have continued to do extremely well. And I think one of the things to point out is, you know, the exact market share that NVIDIA has isn't really tied down to a single number. It's kind of a broad estimate, but it's anywhere between, I've seen 70 to 95+% of the data center market when it comes to GPUs. So they're really continuing to dominate. And if you look at the price of something like AMD shares or Intel shares, AMD is its closest rival. AMD, let's see, they're at about down 7%. On the year. You look at Intel, they're down more than 50%. Obviously, a lot more going on there at Intel than just data center business, their whole turnaround story. But for the year, NVIDIA continuing to just crush with up 188% year to date so far. So it's going to be a really interesting story when we get the earnings report. As I said, there's going to be a lot of lookout for what's going on with Blackwell and the shipments there. And then any kind of conversation that Jensen may or may not have with regards to potential tariffs from the Trump administration. Obviously, everybody's wondering what that means for various companies, and for a company like NVIDIA, with China and Taiwan both in play, it'll be especially important.
Yeah, absolutely, Dan. We've seen a lot of animal spirits emerge even this week, despite the stock taking a little bit of a breather coming into next week's report. We will see exactly what that move looks like after the report drops next week. Dan Howley, thanks so much for teeing this one up for us. Appreciate it. Next up, let's talk a little Tesla and Rivian. They're both on the move here today, but in different directions. Tesla higher 1%, Rivian lower 4%. After falling yesterday following a report that President-elect Trump plans to end an EV tax credit. Now, according to Reuters, the Trump transition team has been discussing ending the $7,500 subsidy meant to encourage consumers to buy electric vehicles. And as we're thinking about some of the other elements of the broader Trump trade and what's being faded as well right now. Vaccine makers, they're feeling the effects of Trump policies falling as he appoints RFK Jr., or at least puts forward RFK Jr. as the name to lead the Department of Health and Human Services. RFK is a prominent vaccine skeptic, and there are concerns that he could elevate an anti-vaccine rhetoric here. And there you're taking a look at many of the vaccine makers' stock in decline, continuing a decline that started yesterday after this news crossed just about afternoon. So ultimately continuing to see how investors are thinking about what these appointments and what these names that are being floated right now, what they could potentially mean in terms of their own propensity to even grow the businesses out, especially for these vaccine makers at this juncture, if there were any more of that rhetoric that were to be layered on as well.
Yeah, I think it's safe to say that there will be more of that rhetoric if, in fact, he is HHS secretary. I think this is concerning on many levels. But putting that aside and just taking a look at Wall Street's reaction, I think that says it all, just in terms of what ultimately this could have, the impact that this could have on the industry, and the implications are potentially far-reaching. You have RBC out this morning talking about the fact that this adds a considerable layer of uncertainty and challenging investability until there's greater clarity on the likelihood of him actually gaining this role. So I think that is the one area where there is some uncertainty about how likely he is to be able to be appointed in this position. TD Cowen saying that they continue to see confirmation for Kennedy as unlikely, but they did note, though, and this is a trend for some of Trump's potential nominations here, that Trump could use a recess appointment to get him into office here. So again, that is a concern. You're seeing that reflected across the board when you take a look at a number of these vaccine makers, when you take a look at a number of these biotech names, just in terms of the far-reaching impact that this could have, more broadly speaking, on the healthcare sector. So you're seeing all of these stocks, or many of these stocks, under a pretty significant amount of pressure today. So of course we will continue to follow that as well. All right, let's take a look at Alibaba missing second quarter revenue estimates, but beating on profit. Weak consumer spending in China weighing on the e-commerce giant. One bright spot was the company's cloud business revenue. That was up 7% from a year ago. We want to bring in Brian McCarthy. He's Macrolens managing principal and chief strategist. It's great to have you back here. So talk to me about these results. I guess maybe a bit encouraging. What is your read?
Yeah, decent results for Alibaba. The stock's on a bit of a roller coaster this morning, which I think is sort of a microcosm of the issues that the stock faces. So the market liked the results, traded up about 4% in the pre-market. As you just showed, it's now down almost 3%, sort of getting dragged back with the broader market. So the market liked that 7% earnings growth in the cloud segment, which has been a bit of a struggle for Alibaba. And that's viewed as showing some tailwind from AI spend in China. Market liked that quite a bit. Their international business shows very healthy growth, up 29% year on year. It's really the one pocket of strong growth within this company at this point. But for perspective, that international business is about a third of the size of their domestic e-commerce business, which was basically flat. And I think that's the root of the issue for this stock, which is that its core business is in a highly competitive sector in a market that is beset with very, very serious macro headwinds.
What do you make of some of the bigger money that have been talking about and praising some of the names in September and October at least? Names like David Tepper, names like Michael Burry, who are now fading some of their position within names like Alibaba.
Yeah, the stock is very cheap. So we're trading at about 10 times forward earnings, something like 25% of the market cap in cash. So it's a very cheap stock, but it's basically been a market performer relative to the Chinese indices over the last couple of years. I expect that to continue again because of the struggles in its core business in a market that's really competitive and not really growing. And I'm very bearish on the Chinese macro economy. As you know, last time we spoke a few weeks ago, I was bearish on the outlook for aggressive fiscal stimulus. We, in fact, did not get aggressive fiscal stimulus. The data we get from these big hedge fund managers is a little lagged. I would assume they all got the memo with the MOF, the Ministry of Finance press conference last week out of China, that there's nothing in the way of aggressive fiscal stimulus coming. So I would expect these hedge fund managers who had been very bullish on this sector to be, reassessing as we speak. Because of course, the other development that's happened since, we last spoke is that we had an election here in the US, and it looks like President-elect Trump is pretty serious about enacting tariffs, both broadly at a 10 or 20% level, but more aggressively against China. And frankly, I had thought a month or so ago that might be something he would back burner out of respect for, the risks it imposes on the economy. But those are not the signs. The signs we're getting is that this could come out of the chute. But we will get a big sign with a possible Treasury announcement later today.
And if it is Lighthizer, how probably, not only Treasury, but if he is, then trades are, lots of names are being floated for Treasury Secretary. How problematic then is this for China?
Yeah, I anticipate him to get this trade czar role. This is something I've been saying for several weeks. Treasury doesn't really suit him. USTR is not a promotion. And from all accounts we've gotten in the press, he is really central to the formulation of the broader economic policy within the administration. And what's caused some friction for Scott Bessent, with the betting markets tightening up, a lot of stories about Howard Lutnick making a push for the job, is that Bessent has been lukewarm on tariffs. Even the op-ed he wrote for Fox today was, tariffs are a negotiating tool. Let's bring them in gradually. Where, Lutnick's approach has been, if the boss wants tariffs, I'm for tariffs. And I think that what we're going to get, I think Bessent will probably get the job. He's being, flying down to Mar-a-Lago for a meeting today. If I had to guess, he's being told, Bob Lighthizer is running my trade policy. I don't want a Treasury Secretary that's causing friction with what we want to do in that space. Are you okay with what we're going to be doing on tariffs? I need to know you're on board. I expect Bessent will say yes, but we'll see. But again, if Lighthizer gets this trade czar role, watch out. It means, big time tariffs are coming early next year. I think the market is really underestimating how destabilizing this could be for the U.S. macroeconomy, and it's incredibly damaging for China. They really have no answers to that kind of policy.
Yeah, we tried to have a lot of conversations around that leading up to the election as well, and now post-election with many of the leaders who are running companies that have the largest exposure as well to some of those risks. Most notably, as we think about those companies, where and how do you expect that to net out for U.S. companies that have the largest revenue exposure to China?
Yeah, so they're caught in the crossfire, of course, in what is going to be a trade battle that's going to heat up inevitably. There's some question as to whether there will be an attempt to engage China in some kind of negotiations. I think they're over that. It didn't go so well the first time around. China did not adhere to its phase one commitments. So I'm not sure there's any point in even having negotiations. So this could proceed pretty quickly to, we're doing the tariffs. If you want to prove to us that you deserve lower tariffs, do something in that realm. And China will probably make life miserable for U.S. multinationals doing business in China. I think that's a very real risk for those names.
Brian McCarthy, Macrolens Managing Principal and Chief Strategist. Thanks so much for taking the time here with us.
Thank you.
Coming up, everyone, we're diving into President-elect Donald Trump's cabinet picks and their impact on the business world.
President-elect Donald Trump saying he will not tap JP Morgan CEO Jamie Dimon for a position in his administration. The president-elect posted on Truth Social that he respects Dimon and thanked him for his service. This coming as Trump has announced multiple appointees to his cabinet as he prepares to take office. Here to talk a little bit more about who makes up the administration so far, we want to bring in Bill Kristol. He's a Bulwark editor at large and host of the podcast Conversations with Bill Kristol. Bill, it's great to have you here back on Yahoo Finance. Let's start with Dimon, and then we can work our way into some of the appointees so far and what we do know. Jamie Dimon was also asked about this during a recent conversation yesterday. He talked about the fact that he hasn't had a boss for 25 years. He's not interested in getting a boss right now. And I don't think it's a big surprise that Dimon is not going to be in this administration, but I'm curious just your reaction to that thought and the words that we did hear from Trump.
I think Trump is showing people that he's in charge. He doesn't care what the establishment thinks. He's willing to stick it to a major establishment figure and kind of humiliate him a little bit, even if he didn't want the job, by making it seem that Jamie Dimon wanted the job and Trump was saying no. I very much agree with your previous guest, Brian McCarthy. The markets are underestimating how radical Trump can be, how much he wants to show that he has personal power, and he wants to, remove any sources of opposition, certainly in Congress and the Senate. We see that with his appointments, I think. Was to kind of humiliate the Senate Republicans and try to see if any of them will stand up to him. And so far, not many are. And I think we're seeing it here too. I mean, on the Robert Kennedy Jr. appointment, which you mentioned earlier in the show, Howard Lutnick, a major figure, I believe, on Wall Street, right? Mm-hmm. A pretty close friend. Wasn't he co-head of the Trump transition, a real figure in Trump world? Assured everyone a week before the election, I've seen the clip, you all have too, no way Robert F. Kennedy Jr. is going to be Secretary of HHS. So what are all these reassurances from Trump intimates, friends, sources, staffers worth? I don't think they're worth much.
And even as we're thinking about all of the potential appointees and by what process Trump might look to push them through as well, how are we to look at this from a perspective of what business is and how some of the CEOs that had said, okay, we're trying to position ourselves around what the outcome of this election might be. And then once it was Trump, many of them saying, oh, hey, congratulations, we look forward to working with your administration once again here. For many of them, they still kind of lack that adult in the room to be clarified once we finally do see a transition of power.
Everyone expected too much, in my view, that it would be like the first term. There'll be Gary Cohn there. There'll be a whole bunch of other grown-ups there in foreign policy, national security policy, and parts of economic policy at least. And we can talk to them and, crazy things won't happen too much. Cohn will sneak in and remove some memo putting tariffs on South Korea, sneak in and take it off Trump's desk, and the White House chief of staff will cooperate and so forth. I just don't think you can count on that this term. I don't know if the Pfizer CEO sent a nice note to Trump the day after the election, but here we are, Robert Kennedy Jr., and, vaccines can't be trusted. And I mean, if I were in another, I'm not a Wall Street person, so what do I know? But if I were in some other, part of in finance or in manufacturing and other things, I wouldn't trust all these reassurances ahead of time. And now what they'll do, I don't know. If you're a CEO, on the one hand, you have to get along, I guess, with the administration that's going to be there for 4 years. So you try to make sure you have good relationships and you try to get on the inside of the crony capitalism. But I think it's, there's a lot of history of people doing that, and they're doing fine for 6 months. And then Trump changes his mind about something and suddenly they're on the outside, right?
So you have Marco Rubio, Secretary of State, Matt Gaetz, Attorney General, the list goes on, Pete Hegseth, Defense Secretary. We talked about RFK Jr. now, HHS potentially. Lots of questions about who exactly is going to get through, who is not. What is the biggest risk in your mind, given the appointees that we've seen so far? Is there one that maybe is a bigger risk for the economy? Not only for the economy, obviously it stretches a lot further than that, but that investors, that our audience should be aware of, and why?
So I think the whole picture is a risk, because it shows he's not constrained the way he was 8 years ago. He wants to have personal and arbitrary power, and he's going to put people in who are either very weak and not fit for the job, I would say. Someone like Pete Hegseth at Defense who will do whatever he says, or he wants to put people in who have kind of radical views, who'll also do what Trump says, but will also shake things up and keep people on their heels, and that's very much part of Trump's playbook. It was his playbook in business. It's his playbook as a politician. No one gets too comfortable, right? So I personally, as a national security person, I think Tulsi Gabbard is, irresponsible beyond belief, pro-Assad, pro-Putin. I don't know that she'll get confirmed. Gaetz at DOJ, there's going to be an exodus of civil servants there. Who knows? I don't know. For now, we kind of assume they're not going to go after individuals in the media or in business who cross them. I don't know, 6 months, 12 months, 18 months from now, as things get normalized, I'm less confident. So I'm very much on the alarmed side, both in terms of the rule of law, in terms of stable economic policy. I very much agree with Brian McCarthy about tariffs, which I've also kind of assumed is the one thing Trump would back off on, because all of his donors and all of his friends in finance are going to have been telling him, you can't really do that. But you know what? He may just want to show I can do what I want. And maybe eventually he backs off if the markets take a hit and he doesn't want the stock market going down and so forth. But I think the degree to which Trump wants to show he is in charge and he's not listening to anyone from the establishment, and they can't take him for granted. I think that's been underestimated.
Do you think that the party would still support these picks and support him even through the very radical picks that have been put forward thus far and the reaction that we could see on an economic basis?
So I think that's a huge question. That's why, for me, what happens in the next 2 months is very important. People have been focused on January 20th, what's going to happen. What happens with these picks is important. It's a different world if Republicans stand up and say no to Robert F. Kennedy Jr., no to Matt Gaetz as Justice, no to Tulsi Gabbard as Director of National Intelligence. Then I think people think, okay, then Republicans will have done that a couple of times, and they'll be used to guarding the guardrails and exercising some power, and Trump will have to back off some. But this is very important. If they all sail through, I think Trump thinks I've got them all in my pocket. And they can whine to me, and they can get some CEO to call me about tariffs. They can get some other defense contractor to call me about something else. And I'm not listening to any of them. So I think this next 2 months is actually much more important than people have sort of realized. Everyone sort of dates the Trump administration, obviously correctly in a legal sense, from next January 20th, 2025. But what happens in this transition in terms of the nominations and the confirmation and the degree to which Republican senators have no willingness or do have a willingness to stand up. And also not just senators, people on the outside. Do retired national security officials say Tulsi Gabbard's totally inappropriate? Do business types get upset? You know, what is the position of Pfizer's CEO on the confirmation of Robert F. Kennedy Jr.? I mean, I'm not picking up Pfizer, very fine company and all that, but what is the position of the trade associations? What's the position of the Business Roundtable? They think it's all just fine to have someone like that running a massive department who thinks all the vaccines are a fraud, basically? I don't know. So I think a lot, what happens in the next 2 months is very important.
We didn't even mention the potential conflicts of interest with Elon Musk. Bill Kristol, who is the Bulwark editor at large, thanks so much for taking the time here with us today.
Yeah, thanks.
And we've got a quick programming note for you as well. Check out Capital Gains, Yahoo Finance's look at how U.S. government policy will impact your bottom line long after the presidential election has closed. And as we are past that, we're now looking at January. Tune in to new episodes every Friday, 12 p.m. Eastern, wherever you get your podcasts. Coming up, Netflix is going live. We get an analyst's take on the streaming giant's live programming strategy next on Catalyst. Do we have any Mike Tyson or Paul Vio? I don't know. We'll see.
Stick around. Netflix is officially taking a swing at live sports. The company will be live streaming the highly anticipated boxing match between social media influencer Jake Paul and former heavyweight champion Mike Tyson. Our very own Alexander Canal has more. And Allie, despite what I initially thought, people do care about this.
I've been seeing it around my social media. They met, for the matchup. I'm not a huge boxing watcher, but Brad, you were even saying that you might go to a bar and watch it. I mean, it's getting attention. It's getting attention, and it comes as Netflix has really been leaning more into live events, not just with the sports aspect of things. Obviously, they had the NFL games on Christmas Day coming later this year, but they also have been doing live comedy specials. They did the live Tom Brady roast, so they're getting more into this live content. And really the purpose of this is for the advertising tier and really to fuel more ads onto the platform. Netflix just reached 70 million global monthly active users. They revealed that on Tuesday. It's been 2 years since the platform launched. That's 40 more, that's a jump from the 40 million users the company revealed in May. So a 75% jump there. So people are signing up for the ad tier. That's encouraging to those advertisers. In that blog post, they actually said that events like the Jake Paul, Mike Tyson fight have been driving more fandom and conversation, which our advertisers love. So that's exactly what we've been doing. So that really is the purpose of it. And I think we're going to see Netflix lean further into live events as they further push into the advertising world. And also they just want to get that engagement up. And Clara, if you want to see this fight, you need to watch it tonight so you can get in on the action.
Do bars have it since it's on Netflix?
It probably will.
Yeah.
Probably.
If you have Netflix, you got it.
Yeah.
It's one of the easiest carried fights
Can you
of all
just
time.
watch it at home?
Yeah, I could.
But you're just going to go out to a
And
bar.
this was rescheduled, remember, from the summer. So it's been a long time coming. They've been pumping it out. They've been promoting it. Everyone seems pretty bullish on it. I don't know. Who do you got winning?
I have
it's
Mike
hard to
Tyson
go
based
against
on
Iron Mike.
absolutely nothing.
I mean, here is the thing. Okay, all right, there's
You have the favorite.
favorite. And I'm going to try and tie this back into a business analysis. So for Netflix, great, and that is the extent of the business analysis. Iron Mike Tyson is a trained professional fighter, and he is coming out of essentially retirement. I think he's got a weed company now. I think he's been in at least 3-4 movies at this juncture. And so multiple. We'll couch it at multiple movies at this juncture. And so he has clearly gotten on to a different phase of his life. And then you get a cash haul that comes forward like this. Why wouldn't he do it? Right. Now he is double Jake Paul's age, whichever Paul is fighting. Jake Paul, okay, yes. Cool. I lose track sometimes because both
There's
of
a lot
these
of Pauls
guys,
out there.
I just wonder if they get tired of being called an influencer that is fighting. So at some point they're going to have to fight somebody real.
Boxing. Yeah, true.
Yeah, like a real active professional
So who
fighter.
do you have?
It's a great question.
It sounds like you're leaning more. Yeah. I can't tell.
I mean,
we're gonna have to check Ben on.
It's a young person fighting a very old person who was very good at their sport for a very long time.
Then you're going Paul.
Well, so
it seems like you're going Paul.
I'm split. It's a split decision, honestly.
All right, odds are 50-50.
From the sports science of it all, I guess.
Well, we're gonna put that question to our guest, maybe.
Yeah, just tweet at us if you're upset that I gave you a non-pick. At the Brad Smith at Yahoo Finance. Just light it up. Allie, thanks so much.
Of course. Allie.
All right. Join us now for more on Netflix's live sports strategy and the broader streaming landscape. Michael Pachter, who do you got of Wedbush Securities, Managing Director of Equity Research?
Tyson with the knockout, and I'm watching it as well because it'll be more fun with other people, so I'm with you.
All right, exactly, you're with me on this one. So, all right, all these things considered, when you think about what this means for Netflix and making sure that they can capitalize on events like this and use this as an inflection point for some of their other major sports ambitions, because they also have, even more fights that are going to be coming to the platform with the tie-up with TKO. How does this serve as a jumping off point for that?
I mean, Allie nailed it. They're doing this more because we're talking about it. So, you're covering it. I think that there's two types of live events. There's live events where the content has no value as soon as the event is over, like last night's football game. You're just not going to watch it again. You know who won. And same with this fight. Tomorrow we won't care because we'll know who won. Then there's other live broadcasts that actually has ongoing value, something like The Voice or Watch What Happens Live on Bravo that can be rebroadcast on Peacock. And if you haven't watched that, you're fine watching it again. It doesn't really matter what the cat fight was in the live event. In fact, you might hear about a cat fight and you might decide you want to watch it. Alexis was a bitch on something. So you want to watch it and find out what happened. I think that what Netflix is doing is a mix of both. So we don't really care about the outcome of WWE SmackDown. I think that's Friday night or Raw on Monday night. I don't think we really care because we know it's all staged and it has huge archive value, but the people who do care will watch it live. And Ali said it perfectly. What broadcast does for Netflix is it allows them to advertise. And the open question is, will they advertise on the rebroadcast? When things are archived, if I'm watching to catch up on this season of WWE, if I'm watching the last 10 weeks, do they advertise on that programming? And I think they do. The part that I think she missed, and I think this is actually more important for the stock, is that the 30 million ad-supported customers that they added aren't really additions. They're really people who traded down. They didn't add 30 million people in the last 6 months. We know that. They added like 5. So, what happened? People aren't churning out, and that matters. So Netflix has found a way to keep churn super low. And somebody who says, I'm not watching Netflix that much, I can't afford $15 a month, I can afford $6.99 and I'll tolerate a few ads. 30 million of those people signed up in the last 6 months to do that. That's huge. So if churn declines at Netflix and they can retain the customer, and then ad sales go up and they can replace the dollars lost, they can capture another $9 or $8 per customer from advertising, they're golden. And that's what's happening. And that's why the stock is working.
Michael, how big of a catalyst do you see these initiatives, them being for Netflix's stock going forward?
I think that they really have to abandon the ongoing live events. Like, they shouldn't bid for Thursday night football or Sunday football. I mean, that's just something that costs them billions of dollars And first of all, the NFL would be stupid to put that on Netflix. But bidding for things that are kind of staged like WWE, pretty smart. British baking show, we don't really care what the outcome of that is. It's entertaining, even if you're watching 5 years ago. World Series of Poker, they can broadcast stuff like that and do really, really well. So yes, super important because it supports the ad-supported option. It gets ad revenue from the subscription people as well. Ad-free, I still have to watch ads. This on Thursday Night Football, you had to watch ads on Amazon Prime. So, it's a smart move because it's going to bolster revenue without really upsetting their customer base.
Michael, as you think about what the return on investment for some of these major contracts should look like, how much are you comfortable with Netflix bidding to spend on whether it be live sports or other major live events, because they're trying to create that around, even reunion episodes of Love is Blind in the future, I imagine. Look, they got me on that. So, it's going to bring in more viewers, but on the spend basis, what are you kind of looking at and earmarking as this seems like it's too exorbitant or this seems reasonable for how much they would get in return?
Yeah, they're taking little tiny nibbles as opposed to going and swinging for the fences. So, yes, Love is Blind, but that's cheap. Comedy specials, not Chris Rock, that's really cheap. They're not bidding on the NFL, the Sunday games, 2 games a year, okay. They're not bidding on the NBA, Amazon is. They're not bidding on Thursday Night Football, Amazon is, and Peacock is. So I think that the big broadcasters and the big tech companies who have hundreds of billions of dollars more than Netflix has to spend are spending it. I think the sports leagues are idiotic going for the short-term, solution and fragmenting their rights and alienating their customers. When people find out they can't get a playoff game, because they don't subscribe to Prime, that's just terrible. But Netflix is managing their balance sheet really, really well, and they're taking tiny, tiny bets. The biggest bet they made is WWE. And even that, they're going to make it up in ad revenue. So it actually turns out to be a great deal because they're paying WWE for global rights, and they're going to have 200 million households outside the U.S. that have never seen a WWE wrestling match. They're going to actually probably hook 10 million people in weird places like Slovenia and Ghana who have never watched WWE but are paying to be Netflix customers. So I think it's really, really smart.
Michael, I want to pivot real quick. You're the perfect person to ask this question. Stay in the streaming realm, the media realm, but focus on Disney. Reports out this week that Disney's expanding the CEO search for Bob Iger, reportedly interested in EA's Andrew Wilson. Does Wilson make sense for Disney? Why or why not?
Andrew is probably 49, I think. He's not 50 yet, I don't think. 10 years as EA CEO. He invented FIFA Ultimate Team, so he invented the ongoing recurring revenue sports business at EA. They have turned that into, roughly half of their overall, $7 billion of revenue. So he's really a good CEO, really gets sports. EA has all the big sports. They don't do well in basketball. They're great at college football and NFL football and soccer. And I think ESPN has always hoped to branch out and do more than just subscription service. So I think, if you merge the two, the guys who do the video games and interactive and ongoing, Ultimate Team is like fantasy sports. So really good at that. Merge that with ESPN fantasy football and ESPN broadcast. I think EA makes a lot of sense for Disney to acquire. Disney hasn't done it because they suck at video games. They've shut down video games 3 times. They've tried it 3 times and failed 3 times, the last 2 under Iger. So I think, this is an indication that the Disney board really is interested in video games. I think that Disney board is looking for somebody 20 years younger than Iger, and they've got that in Wilson. They're looking for an accomplished CEO. They've got that in Wilson. So I actually think it happens. I mean, again, they may find somebody else. There's always guys out there like Jeff Shell who would be fine to run Disney, but I think the right guy is Andrew Wilson. So I think that deal happens.
All right, Michael Pachter, great to have you. Thanks so much for taking the time to join us here this morning. We've got much more of your market action ahead. Stay tuned. You're watching Yahoo Finance.